Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, May 2nd. Greetings from Zurich, Switzerland. I've had a little technical issue here and we'll be able to get through most of these markets. Also, I'm ready to catch a plane, so we're going to make this short and to the point today. We're finding some sellers coming in yesterday in terms of that NASDAQ market. We did not want to see this equal and opposite at higher highs. We have fundamentals coming out today also that the market's going to react to. So what we're going to see here is the market resilient. If not, we're going to be weak going into the weekend. If we look at the Euro's made new highs on selling. Again, a sign of weakness as we go into today's numbers. Not a good sign for follow through back to the upside, which is what I'm looking for. I'm not bullish on the US dollar. So we're looking for a sideways market today to lower, depending on some of the numbers and how we react to it, though. Let's take a look at the interest rate markets. We can see the notes continue to work their way higher. And again, it goes back to reacting to yesterday's fundamentals. We're looking for a sideways market there. And when it comes to, let's move on to, there we go. There we are. Let's move on to metals. What we're seeing for gold is that this market's finding sellers at these levels. A sign of worry when it comes to the gold market. Now, if indeed we find continuation of selling, which is what this would imply, although we're at the midpoint of this benchmark candle, we could easily stop and go sideways here. But from my point of view, the next 3 days, if we start moving lower, we would be looking for a dramatic move. And as we talked about in the advanced video, some of these references become pretty important for us. If we look at crude oil, I'm looking for a sideways move today. We're at significant stockpile levels. And when it comes to the grains, here in this market, in soybeans, the difference between the bullish level and the bearish level in that particular market is 60 cents. Each penny is $50. And what do we look? Again, I'm not suggesting that you would get this, but which is $3,000 a contract. What I am implying, though, I want to get a feel for the magnitude of change that you're seeing here. And that, again, this time of year we expect volatility, and in soybeans, that's exactly what we're getting. We're looking for an unchanged type day today. Well, that concludes today's market studies. Glad you're with me. Look forward to being with you again, and in the meantime, take care.